AJ, there's a line of yours that I think is so profound, which is go-to-market performance rarely breaks all at once.
Yes.
It drifts.
I find early stage companies begin tackling a very specific problem for a very specific set of customers. What happens over time is things get really complicated.
Hello and welcome to the Brilliant People podcast by executive search firm Assertitude. I'm your host, Linnea Jungnelius. I could not be more excited about the guest I'm bringing you today, AJ Gandhi. AJ is one of the most respected go-to-market minds in private equity value creation. He's worked with more than 100 companies across Bain, Alexander Group, Salesforce, RingCentral, and 5 years as Chief Growth Officer of Marlin Equity Partners. Today, AJ leads the Go-to-Market Leader Society and is an independent go-to-market operating partner and the architect of Steer, Piston, and Scalar, the frameworks helping private equity unlock what he calls the most under-leveraged source of return in their portfolios, revenue growth. In this episode, we get into the science behind sales, why go-to-market drifts before it breaks, and why it's costing PE firms at exit. AJ, welcome to the show.
Thanks so much for having me. Excited to be here.
Diving straight in, AJ, long before Bain and long before Salesforce, you ran what I think may have been the most impressive sales campaign of your career at UC Berkeley as a dorm president. Walk us through it.
What we did was we got every single dorm, every floor of every dorm, every sorority, every fraternity to actually, first of all, register to vote. And then second, care about this issue and say, hey, this is an issue and you need to vote for this city council member. And what ended up happening was that city council member won a massive upset election because the student voter turnout was 3x the historical record because we had this programmatic army and campaign that came out there. In some ways, that was the first kind of campaign and sales organization that I led.
So you've got this sort of like deeper drive that I've come to learn from our conversations, like to contribute, to connect, and to build. As you think about that experience, was there also earlier grounding with your family dynamic or that sort of thing that shaped you to go into the field or?
Yeah, there was actually. My dad was a civil engineer, most smart kind of Indian kids of his generation. And he did that until his early 50s. And then there was a downturn in construction and he found himself out of his job at Bechtel. And he discovered sales and personal improvement. So he ended up having a business that focused on just sort of professional growth and developing people. And he had to learn sales. And my dad was a very good engineer, very high IQ. EQ and sales influence didn't come naturally to him. So I saw him on that journey of learning those skills. And that's why I really grabbed onto it.
And you put that to work. Early career, you launched at Bain & Company.
Yeah.
And you've shared that one of your most satisfying work experiences there was building a sales strategy project for Sunkist.
Yes.
And where you built, right, the CRM in 1993 before I think CRMs existed and definitely before anyone called it that. Like, take us into that.
So the one project that I loved the most was with Sunkist. And so this was literally you're selling fruit, you're selling navel oranges and some other varieties to distributors, wholesalers, supermarkets. And what they wanted to do was have a more programmatic approach to sales. One was coming up with a methodology for regional planning, account planning, as well as opportunity management. And then we recognized we needed data to structure it all. So it ended up being a methodology for that sort of planning process, as well as basically a data system. And it was prioritizing, okay, what are the decisions that a salesperson needs to make in this district sales office? And we took it and it worked. Nice results. And the leadership was very enthusiastic about that. He said, go roll it out across the country. So I ended up rolling out across the country, those 6 major regions, brought all the district sales managers and their teams together. And we actually built the system. I worked with their IT team and we built a data system that enabled them to have historical data as well as do forward tracking and forecasting.
If there is one thing from that project that someone could go put into practice on, today is Tuesday, so maybe next Monday, what would that be, you think?
I think it's about having a replicable process that can be scaled over a large team. What's tricky with sales is at the end of the day, you only have kind of two assets with the sales team. You have their time and you have their talent. And if you have 100 salespeople approaching things 100 different ways, you're just going to get a lot of variance. You want to give space for the salespeople to use their talent to a degree, but you want to give them some structure that is going to help them be successful. So it was less about the technology. It was more about, here's a structured manner to look at my district, look at the set of accounts that I have. Here's how to prioritize them. And then to plot out, here's where I think the growth can come from. Here's how much comes from new logo. Here's how much comes from, here's how I approach retention and prevent downsell. Here's how I approach upsell, cross sell. And the key is actually turning that into a replicable methodology and then teaching it to people. I actually think that work is more important than ever. In many ways, I actually think we've strayed from the fundamentals in sales, especially when you throw in the pandemic, especially when I spent a lot of time in tech. You think about the quote, easy years where buyers were buying. I think a big part of the problem that we're having is just this
lack of structure, lack of planning. And it truly is about doing the pre-work, the age-old thing, right? Go slow to go fast.
Yes, it's just being super intentional. Here's the reality. A salesperson has to make a lot of decisions. You can think of it this way. If you have 50 accounts and 4 products to sell, those are 200 decision points about what do you sell to whom and where do you put your energy. And the reality is you don't have time to cover all of it. So you have to be thoughtful. You have to be strategic about where you put your emphasis. And for too many salespeople, they'll focus on the comfort zone. They will focus on, I know these accounts well, they like me, so I'll go there. I know this core product well, this new product, I'm not so sure about it. Or I may think it's good, but I don't really know how to sell it.
Yep.
So I'm just it's risky to sell it. If I put too much energy there and it doesn't work out, I won't make my number and I put my job at risk. Yeah.
And you will be able to, if you do the work, to actually win business in areas where you don't have any warmth yet, I think. So that framework really makes sense to me. After Bain, you went to Harvard Business School, expecting to go master these fundamentals of business that you've now been talking about. But something was missing there. What was it?
First of all, I got so much out of Harvard Business School. I learned a ton, met great people, had amazing professors. Though there was a pretty big thing missing at Harvard Business School during my time. And that is when I was there was no course on sales. This is one of the largest business schools in the country, not to mention one of the most prestigious. And how could it be that there's no course on sales? And what actually was the situation was there had been before. And I went through HBS, learned a ton, and had an amazing experience. I wouldn't trade it for the world, but it was really perplexing. So I worked on a business plan for a startup in business school and elected to pursue it. And then we hired in the hired gun, sort of superstar, big corporate logo sales leader, as well as marketing leader. They had great resumes, but they didn't adapt from big company land to being an emerging company with really no brand. And they really struggled. My big reflection from it was I learned nothing about sales at Harvard Business School. And I didn't really learn much at Bain either. In fact, Bain's view at the time was, look, there's a lot of work that we can do as consultants. Sales is a tricky one because if you get it wrong, these are very sensitive organizations. The good people leave, the company's really in a lot of trouble. And so I remember talking to a partner who I respected a lot when actually the situation was, I was thinking about coming back to consulting and coming back to Bain after my startup experience, after doing 4 years of it. And I asked her, hey, how do you feel about putting more of a focus on sales and how do you feel about me coming back? So they were interested in having me back, but they're like, we're not sure about the sales thing yet. And that's, of course, since changed dramatically, but it was back then. And what year was that? That was kind of like 2002. It was still not a big focus area. At least for Bain at that time.
I want to pick up on one nugget you said, which was people coming out of big companies into maybe smaller, scrappier, no brand names in the market and struggling. Yeah. And we see that a lot too in hiring, even at the C-suite level, right? Yep. CROs or of that nature. Why do you think people struggle, and what do you actually need if you are a brand that doesn't have the big company brand equity behind you in the market?
Yeah, it can be quite different. So here's the thing. When you are at a big brand, that giant flag is credentializing. It's like, hey, I'm with Cisco, I'm with IBM. These are probably companies more back in the day. I'm with HP. There's credibility to me and to whatever I have to sell because I'm at these great brands. And that's useful, but when you're accustomed to having, that's super different than when you're suddenly, hey, I'm an emerging company that you've never heard of. And how am I going to overcome that skepticism that it makes sense for you to consider me as a solution provider to your problem when you've never heard of my company? And so that gap is really a big challenge. And just how you build a marketing organization, a sales organization, et cetera, that has to evolve a lot. What I would say further is related to that accordingly is just it's irrational to buy from a startup. So you have to be super mindful about that. And so I think stage and context fit are very important when hiring sales leaders to make sure that they have demonstrated that they can adapt to that situation where they don't have those big corporate flags.
Absolutely. So you found your way to Alexander Group from there, one of the few firms back then that took sales seriously as a discipline.
Yeah.
What was happening there that you couldn't have learned anywhere else?
It's where I truly learned to sell. Like I learned to sell in my startup, and it was lots of lots of hard lessons, of course. And thankfully, I did have some reasonable success. But I recognized, hey, there is a lot of art to sales, but there's an immense amount of science or strategy, structure, and operations that need to exist. And I really had the opportunity at Alexander Group to round out that skill set and that exposure set. And the senior partners were like, hey, look, that's just like the Trojan horse. Now, if you're in there to do sales compensation, you have to understand everything about the sales organization. And if you do, and you have the business acumen, you can actually, help those clients with a lot broader things. And so I ended up joining there, was there for 3.5 years. And it was a fabulous experience. We more than tripled the office during that time frame in Silicon Valley. We expanded every account that I worked with, but it really taught me how to sell. I learned the craft, but what I think was most instructive for me was learning how to become a salesperson. My quip about it is my job was selling sales consulting to sales leaders. And that was literally it. Like these guys and gals did not buy consulting. And so some of the projects would actually start off pretty small. I remember my projects at Oracle. They were like the big firms would never touch these projects, these 50K projects, but we used them to help their inside sales organization. There were so many other places that you're able to get in the door at a much lower kind of investment. And then if you're good and you build relationships, you can do much more.
So you said you really learned how to sell there. It's about customer obsession and customer care and customer focus, which is, look, they have these projects that other people don't want to touch, but are actually big needs in their businesses. We're willing to help them with those. And as a result of that client centricity, it opens up the door for lots bigger works, long-term, loyal relationships. Is that one of the things? Or are there other aspects of when you say really learning how to sell that you took away from that experience?
So I think there's a mix. There's a mix of different types of client situations. So some of them were, hey, we did the comp work and we would seek to highlight, hey, as part of this comp work, we also noticed these issues with ideal customer profile, definition, segmentation, targeting, channel strategy, sales process, et cetera, many things. So that was one aspect. That was the I would say it's more the upsell, cross sell, because people came to us for sales compensation. That was actually super helpful. I think a second type of selling was actually new logo selling, where we would actually just start with, maybe it's even just more, I won't quite call it staff augmentation, but just taking on smaller projects to get our foot in the door to actually just help them. And a lot of the early work at Oracle was like that, actually. And then the third was actually really just trying to sell bigger projects, new logo wise. I'd call people up and say, I'd love to share this executive briefing with you, but would you like to hear about the 10 levers?
Yep.
I would ask, which of the 10 are you really good at? Where could you be better? And what I would also require is I'd require 2 people in the room. That was part of the condition. And the 2 people in the room generated projects for me because they would challenge each other. It's this, and their colleague would either say, I totally agree, or no, what about this? And so that was a prompt for me to actually start to get into discovery with them. And I sold so much business that way.
Yeah.
And
I was just going to say, beautiful discovery and qualification approach.
yeah, it works super well. And it was just fun. It's like, to me, what's most enjoyable about my career at this stage is because I have done so much. I feel like I can walk into anywhere and I can find opportunities for growth or opportunities for productivity improvement. And I love doing it.
Yeah.
I help people and people are really appreciative. So it's incredibly satisfying.
That is good sales. Good sales is literal guidance and actual impact. Pivoting.
Yeah.
A VC once told you, don't hire the Oracle rep, hire the Sybase rep. Why?
Yeah. I think I picked this up talking to a friend of mine who I worked with at Bain, who became a VC. And I told him, hey, look, I decided not to go back to Bain. I decided to focus on sales. And we talked about all these things. And he prompted me, how do you think about talent? So I told him my viewpoints. And to be honest, it was early in my career at Alexander Group. So I was still learning. And his comment to me was, here's my thing. And it really speaks to the experience that I had in my first startup. And that was, look, the seller who depends upon that big brand name, that's a very different situation than someone who's at a challenger brand, or in the case of Sybase, probably a brand that's diminished over time. And what it really resonated for me, because that to be successful, that Sybase rep has to be way more thoughtful, way more clever, and they likely have much better core skills. They're probably better at prospecting. They're probably better at discovery, qualification, multi-threading. It's like objection handling. They have to be better if you're going to sell Sybase versus Oracle. And so that's really resonated well for me. I think they're part of SAP, but it's a really relevant principle. It's super foundational. Because what you need at the end of the day, within sellers, the selling can be done by the brand. And certain things are just bought, they're not sold, because I'm going to buy that thing from the big company. Other things are actually really much more driven by the salesperson.
Yeah.
And so that is a big difference.
Salesforce truly was your enterprise selling classroom. What's the one thing companies moving up market still get wrong? And how do we get it right?
Yeah, I think there's many things. I think the first one that I will really ground to is just being super disciplined on your ideal customer profile. And I can give you an example here that brings it to life. When I joined Salesforce, we really wanted to, I joined about $1 billion in revenue, and we wanted to go up market to the enterprise. And we had 200 salespeople. So I'm like, okay, that means every salesperson's got like 50 accounts. These are big, complex accounts. You're not going to just get into 50 accounts by spreading yourself thin. You've got to be super focused. So what we ended up doing is going super detailed on all the data that we could find that frankly went through very straightforward things when you actually take a step back at it. And we said, okay, let's focus on the industries that have lots of sales teams. Let's focus on the accounts that actually already have a little bit of a seed. Let's focus on certain geographies that were more accessible. There are a bunch of there were a bunch of like technographic factors that we looked at as well. Even back then, what year was this? It's not 50 accounts. There's actually kind of 7 on average that really matter. And so over the course of 2 years, we went from having 11,000 accounts in enterprise to having 2,000 accounts. And each rep would only have 7. And that focus enables you to be successful because you just put energy on, now I know what hill I'm going after, and I can put all my energy to actually win that hill. It's the foundational principle. There are other things to winning in the enterprise, which I'm happy to go into, but it starts with just being incredibly intentional.
Anything else that you think is worthy of mention that took you 20 years to learn that we could teach somebody here in 30 seconds?
I think the most foundational issue is really discovery. Look, people don't want to buy anything. They want to solve their own problems. And if I were to pick one skill set that distinguishes the top performing reps from the mid-level performers and the mediocre performers, it is discovery. They have the business acumen to understand the customer's business. They've done research, but they're able to have a peer level conversation they have the business acumen to say, okay, you run service supply chain for a big medical imaging company. What types of issues do you have having this number of machines, this number of customers spread out all throughout the world, this number of warehouses? How do you think through what inventory levels to have? How do you think what parts to put on the truck to make sure that you can actually service the machines when they go down on the first visit? Because that has a huge impact on the customer and a huge impact on your economics. So if you have that level of business acumen to do that kind of discovery, first of all, you're going to distinguish yourself as a seller versus competitors. But you're actually really, and this is the part that I think people don't appreciate, a salesperson is a problem solver. And their job is to work with customers or prospects to help them solve problems. And if you are doing that and you have a relevant solution, your job is helping them be successful. And it's one of the most satisfying jobs that you'll ever have. And by the way, it also is incredibly rewarding.
Truly. At RingCentral,
Yeah.
you ran a 350 person team during the cloud transition there. And you've said that you learned what holistic go to market actually looks like.
Yeah.
Walk us through that.
If you really think about it, a lot of times people say, oh, sales is a function. It is not the overall customer buying journey or customer life cycle. If you actually take a step back and say, what are we really trying to achieve here? We're trying to achieve success over the customer life cycle and acquire the right customers, have them stay with us, have them grow with us, and take as much, quote, wallet share as you can by doing more and more from them over time. That's really the objective. What are all the functions that are required to do that? Yes, there's sales, but that's like the mid-late funnel. What about the top of funnel? Top of funnel, it's marketing. So there's the partner ecosystem. And then when you win a customer, that's step one, especially in a recurring revenue business. It is then about how do you make that customer realize value? Of course, you have to think about this all within the realm of finance, not to mention talent. Go to market, you have to think about it holistically if you're building a company and you're scaling a company. And that was what was most exciting to me about RingCentral. My remit when I first started was really on the sales and channel side. It was strategy, it was operations, it was the productivity and enablement functions. And over time, the role just grew. But there are many functions that I certainly did not own, but I had important partners and we had to make sure that we collaborated really well together. Like marketing was essential to our business. So first of all, it provided the inbound for a lot of our pipeline needs, but we wanted to move up into the enterprise in RingCentral. So the outbound side, the account-based approach was super important.
This conversation clearly is showing all the knowledge and the skills and the expertise that you've gained over this period. And you walked into Ring as maybe known more as the quote IQ guy with all these things added up together, but you left understanding why EQ really is the superpower.
Yeah.
What changed for you?
Yeah, so look, I always hoped I was a pretty good team leader. And in certain environments, I was a very strong team leader. Though I had a little bit of a bias towards working with people of a certain type. Like at Salesforce, I inherited and hired in really smart, highly motivated professionals that came through top business schools. And we had a lot of ex-management consultants. And there was an archetype of person. And when you have that archetype of person, you know how to manage them. What's different when you get to a much larger organization is you have people of much different backgrounds and personality types.
You turned down a lot of private equity roles before you entered the role you had at Marlin Equity Partners. I want to talk about this pivot into private equity. What finally pulled you into PE, having now been in consulting, obviously being in operator seats? And for anyone that's maybe weighing a move today, how did you select Marlin, or how do you think about evaluating a fund?
Yeah. Because I have a certain pedigree of consulting and I would get calls over the years from some of the leading funds. The one part that I just took pause at, though, was the way some of these roles were constructed is that the job was effectively work on these two portfolio companies. And when I was probing and having conversations, it's positioned to me, you don't really come to the office. You just go to the portfolio company and you go work with them. Maybe the good part is you have a longer client span because they're part of the portfolio and the holding period is multiple years. But that just didn't seem satisfying to me. Though one executive recruiter really did get into my head and guided me on how to think about it. So
Yeah,
it's like,
sounds
hey,
like we should hire them.
what they highlighted is they got to know me. It's like, okay, you're really good at this stuff. And I can tell that you really dig it. And their comment to me was, you're underutilized in your current job. And that made me stop in my tracks. And I listened further. And what they said to me was, look, you could work in one company and do all these things. And even if your role continues to expand, great, but you should be working in a portfolio of companies. You can do much more. And that resonated for me. And because I did believe that. And there was a big part of me, and frankly, 3 years into a company, after a while, we were still doing lots of new things at Ring Central. We were moving up enterprise, we're going multi-product, we're starting to do a global expansion. So I felt very well equipped to go do that. But I felt like I could do more. And I wasn't the CRO. So I definitely felt like I could do more. And so that was the part that really attracted me to private equity, was the chance to work on a full portfolio. And then when I was called about Marlin, this is the same executive recruiter. I first told him, I'm not familiar with this fund. So if I go join a private equity fund, shouldn't I join like a bigger fund that I know? And as I heard more about the fund, first of all, they were much bigger than I realized. It was like, oh, it was a substantial fund with a lot of companies. So that was just my ignorance. But as I got to know them, what was most important to me was my conversations with the person who would be my boss, who headed up all operations of the managing partner. And what they said is, we believe in go-to-market value creation, and we feel like we want to build out this capability. And what Marlin was doing at that time, shifting from a generalist model of operating partners, where it was often late stage CEOs, to a more specialized flavor of operating partners. And frankly, both are valuable. And Marlin did continue doing both. But the shift was going more towards specialization. And so it was a canvas. I got to build out the capability of how we did things in go to market. And so that was super attractive to me.
Super interesting. And what about if you were looking today to join one? What would be important to you?
There are three criteria I would fundamentally have. And I think we need to be mindful about this moment in private equity, because it's just, if you think about the macro environment, private equity is challenging it's just a trickier time in private equity for, I think, the reasons that many people on this call know. So I won't go into it. Second, if I've spent a lot of time in B2B tech and software, certainly we know there's some interesting dynamics going on there.
Some may even call it a SaaS apocalypse.
Yes, indeed. Yes. The media is always very good at putting labels on things. And then third is just go to market's harder than ever. The old playbook's not working. So given those three dynamics, I would say three things that I would look for. And as I actually am having a few conversations, one is, certainly you want to be with a fund with a winning track record. That's obvious, but there are going to be certain funds that emerge from this situation healthier than others. The second thing is, and really probably the most important, is conviction and ambition for go-to-market value creation. I feel very strongly about this. I think there are certain funds that do have this and actually want to actually increase it a notch. There are a lot of funds that actually say, you know what, it's just hard to have conviction because it's not like a guaranteed return like cost reduction or pricing or M&A consolidation and roll-ups. Those, and they're actually right. It's like you can have much more conviction about those things. It's, hey, I take this action, it's going to work. But we're at a stage in private equity now that if you're not taking on the revenue growth pursuit and more ambitious go-to-market value creation, I think it's going to be very difficult to make a return. And so that's super important. But I think certain funds are stronger in this than others. So that conviction and ambition for go-to-market would be the second. The third is, I think that the model has also evolved where being collaborative people is super important. There's probably an old style of private equity that's a little bit rough and tumble and very prescriptive. You do what we say, we're the bosses. For me personally, I want to be in an environment which is much more collaborative. It's like, hey, look, we're all on the same team, the deal team, the management team, the operating team. We're all in it together to make this company better. And if we do that, we're all going to be successful.
So let's get into this work around go-to-market value creation specifically. You built this function at Marlin from scratch. And since you've seen dozens of other funds try their own versions and experiment and evolve their teams. What's working and what's still theater?
The state of go-to-market value creation today, So first of all, if I'm looking at funds, I would say some have conviction and some do not. I think there are a bunch. If I actually look at the world of funds out there, and I've actually, in the past few months, I've been working on this project where I've been interviewing with a partner 50 funds about how they approach go-to-market value creation. And there's a set of funds that have conviction. And they have one of two models. They either have a small team that works really closely with the deal team, and they're involved in diligence, all to develop the value creation plan and involved as an equal partner all throughout the journey. Or they have that plus they've gone really deep in saying, hey, I'm going to build out a lot of domain expertise and build out a much larger team. That's one category. There's another category of firms that is, I'm going to have one or two go-to-market and operating partners, and their role is going to be diagnostic to evaluate what's working and what can be improved. And then the rest is going to be orchestrating third parties. And that's the approach that the majority of funds take. I think it's still a high value role, but it's not conviction. And I think the firms in the former category are going to be a lot more successful.
And are there specific fund types, investment strategies where either one of those approaches you think are a better fit for the type of fund?
Well, I think having control, so being a control investor naturally motivates one to be willing to make this investment because you have a control position versus a venture capital firm or a growth equity investor where maybe you only have a 10, 20, 30% ownership interest. If you invest in this, maybe the others are riding along for it. So I think that does make it easier to make that investment. Though what I'll tell you is I'm actually seeing a lot of newer funds pop up where their minority owner, if let's say you're a VC or growth equity, they'll say, you know what, part of our differentiation play is going to be, we have this go-to-market value creation capability, and we think it's super important. And that's actually motivating people to choose them as a sponsor versus just somebody who's providing investment dollars. And because that actually helps them grow their business.
Yeah. I hear that even up to LP conversations and the focus on the go-to-market value creation function, but obviously the value creation function as a whole and how it serves in driving ROI. You've been deep also in the data on PE value creation.
Sure.
Walk us through what the numbers are telling you.
My exposure is probably more anecdotal than it is authoritative because one in my seat doesn't get to view. But here's what I am seeing. There are a couple of firms that they do report out to different kind of industry groups and analyst groups that are really investing quite ambitiously in go-to-market value creation. And they are among the top performing funds. Here, I think of the HG Capital, the TA Associates, and the Francisco Partners of the world. There's enough public data that shows what their performance is of their funds. And it's very strong. And I think it's no accident that those three funds are among the most progressive when it comes to go-to-market value creation.
Yeah. And what about either anecdotal or numbers you're seeing in terms of what the levers of go-to-market are and which ones have greater impact and how go-to-market performance moves exit multiples?
So this is the STEER framework for me, where I've really tried to distill what I've done across my 25 plus year career doing B2B go-to-market work and literally 100 companies. Plus, I'm just a student of this game. So I've spent so much time the last year just researching out in depth because I really want to crystallize. I feel like I can get better at this work every quarter. I put it down to 5 foundational pillars, and they're going to sound very straightforward to you, but it's really going to be about the sub pillars and then are you actually putting into place mechanisms and strategies to actually execute upon them? But the framework is STEER. The S stands for strategy. The T stands for team, which is like the executive team. The E stands for efficiency. The second E stands for effectiveness. That's like productivity. And then the R stands for kind of revenue operations. And I could almost even tuck in AI in that. And I'm happy to expand upon that.
Yeah, we will.
Yes.
Yeah.
Okay.
Amazing. AJ, there's a line of yours that I think is so profound, which is, quote, go-to-market performance rarely breaks all at once.
Yes.
It drifts.
Yes.
Unpack that for me.
Yeah, I think it really starts with the foundational thing that we've talked about a bit already, and that is ideal customer profile. I find early stage companies generally begin tackling a very specific problem for a very specific set of customers. And when they drive impact, that's when they get the opportunity to scale. I think what happens over time is when companies want to grow, they say, let's see, we had success in this vertical, but we can sell to all these verticals. We have success in this geography, we can sell to all these geographies. We have success in this size of customer, we can broaden that. And then we should take on many different types of go-to-market routes to market in terms of channels and programs. And just what happens over time is things get really complicated. And what I think too few companies do is get very disciplined at actually is saying, all right, before we sprawl out to go try and do all kinds of other stuff, let's actually really nail the core and dominate the core. When you dominate the core, you build a moat around it. And these days, Lord knows we want a moat. And I would actually say this, the only real moat that exists anymore is knowledge and delivering value to the customer. That is the moat that exists. If you have your customers understanding, if you have their back, you're delivering value for them, you are going to have their loyalty. I think too many companies have, in their aspirations of growth, saying, hey, I want to be a global company that dominates everywhere. They spread themselves too thin. And I think this is especially true within private equity companies. I'm not saying that these aren't good and good markets, but is this really your priority? We were in 50 countries, but we wanted to be the market leader. And so what we said is we need to ratchet back. We're on pace to be market leader in North America. So US, Canada, and things that look like US, Canada. So throw in UK and Australia. But we want to win the next X countries. So we focused on the top 9 countries at Salesforce. And when you focus, just like that enterprise customer example I gave you earlier, you're just much more in tune with what that customer, what that market segment needs. And I think the companies that do this are much more successful because you may acquire customers, but guess what? They'll be harder to serve.
Yeah.
They'll be less profitable. They'll churn more. You'll have more price discounting. You'll have more concessions. So it's great to expand, but expand in a really disciplined way, but dominate your core first. It's the most basic, boring strategy advice ever, but it is the one that is so seldom followed.
You've said that the function, though, that PE porcos are weakest at isn't sales, it's marketing. Why is marketing such a blind spot?
Yeah, this was a big kind of revelation to me when I landed in private equity. First of all, I'd worked with great marketing before, very much Salesforce. Some of the most gifted marketers that are in the industry went through Salesforce because at the end of the day, why was Salesforce such a juggernaut? Was it sales? Was it product? Actually, I think it was probably P.T. Barnum, who is another name for P.T. Barnum is Mark Benioff. Mark was the ultimate marketer. You could call him a seller, but no, he's not doing individual deals. He was a marketer and he built this category and he motivated people to say, move to the cloud. And so he was a brilliant marketer. When I got to PE, what I found was there wasn't really much regard for investing in marketing because it was hard to measure. Was a big part of it. The investment would be dominantly focused on sales. If you look at a typical software company, and this be data points from maybe 5 years back before we started ratcheting down costs a little bit. But like 40% of revenue was spent on sales and marketing for a typical public software company 5 years ago. And of that 40%, it was usually 80% or 32% was spent on sales and 8% on marketing. So sales was way more than marketing. So marketing has this smaller budget. And in private equity, it's probably, it might even be more skewed because we want to be able to measure things. And it would be very hard to measure marketing because we have these funny things called MQLs as a measurement. Marketing tended to be underfunded in a lot of companies, or at least under-sophisticated. Is that a problem? Here's why the answer is yes. Now more than ever, the buyer's journey is increasingly independent. Gartner's latest data point is 80% of the buyer's journey occurs without the salesperson in the room. If 80% of the buyer's journey occurs when the salesperson is not in the room, why are we putting 80% of our go-to-market investment in sales and only 20% in marketing? It's because marketing has a lot of things that it actually needs to strengthen to, first of all, communicate its value. And so there's a bunch of things on the marketing executive teams that they have to strengthen, and especially build a much stronger relationship with CFOs. But I think CEOs, CFOs, and boards actually need to think about marketing much more. And it's not just demand generation. you actually do need some things that are actually going to give you brand. So you have that awareness and consideration. And then second, product marketing. So you tell your story. In many ways, I actually like to say, I don't talk about brand to boards. I say what we need is awareness and consideration. And the way we get that is investing in brand and product marketing to tell the story. And so when you have really strong marketing there, first of all, you get shortlisted, which is more important than ever in this world of AI search, where people are finding their shortlist just through the AI search. But second, when you have really great product marketing, positioning and messaging does so much to actually tell the story.
Great marketing by you to the board.
Yes, and it requires marketing.
Yeah.
It's a journey to actually persuade people to understand this.
Yeah. AJ, you've spent all this time doing research, hosting a number of events, and you've built these set of frameworks that are really quite pioneering in go-to-market in PE. The best one you're known for is STEER, STEER.
Yeah.
How did you build it? What does it do? What does it stand for?
Yeah. So STEER is the macro framework across a lot of work that's required. And where it came from is just thinking holistically about go-to-market success. There could be a fundamental strategy issue. This is a product market fit issues. So you actually have to start with strategy. And strategy begins with, who's my ideal customer profile and what problem am I solving for them? And how well do I solve it versus their next best alternative? You have to begin with that. And if you're not that, if you aren't clear on who you're going after, what problem you're solving, you don't solve that problem in a way that's distinctive versus the next best alternative, everything else is going to struggle. And so you have to make sure that you get that right before Salesforce effectiveness or marketing programs or channel strategies are going to work. So there's another acronym, and the acronym is SAILOR. So here it starts with stage and context fit. So that helps you make a decision. Hey, if I have an emerging company, maybe I don't want to hire that person from that really big brand like Salesforce or Workday. Maybe they had their foundational experience there, but then they've worked and proven that they can be successful at smaller ventures. The C, it's related to business acumen, because you might go from a company focused on mid-market that's now focused on enterprise. You might go from a business that was all direct to a business that's direct in channel. The A is adaptability. Things are going to change over the life cycle of a business. The L stands for leadership and how you build your team and lead your team. The E stands for execution rigor. And I believe as companies scale, you do need to have processes for how you run the team strategically as well as tactically.
Yep.
And then the final R stands for relationships with other functions. No matter what your role is in go-to-market, the only person who really owns all of go-to-market is the CEO.
So now we've covered how you evaluate go-to-market leaders, and that brings us back up to STEER. So now we've done S, we've done T, moving on to E.
Yeah, moving on to E. So efficiency. So when I get involved in a company, first thing is let's get the strategy right. Let's make sure we have the right management team in place. So they're kind of 5 R's for actually reining in efficiency. One is actually just rationalizing the segments that you're in. The next R is related to, there's a lot of management overhead in companies. The next one comes to sales. And what we're seeing more and more these days is just really rough performance distribution where you've got a handful of really top sellers and everybody else there's a big gap. There's very bimodal performance distribution. And you got to rationalize it. And then the final one is there's so much tech bloat out there right now. You need to look at, hey, what tools am I using? Which ones can I consolidate on? If you save money there, you can either take that money and put it in your pocket as extra EBITDA, or it actually gives you money to go invest in other things that are actually going to make the business more successful.
Yeah. And when we do go invest, then it's about effectiveness. So that
Correct.
brings us to your second E.
Yeah. So effectiveness. So I call this the engine of go-to-market.
Yeah.
And so I've got another cute acronym. It is PISTON.
Yeah.
And for me, this is like the set of things that are fundamentals that I think are critical that oftentimes aren't optimized in companies. So it's not going to be everything, but these are 6 things that I think are super, super important. The P is positioning and messaging. We live in a world where especially in software, where every software category has a bazillion players. What makes your problem important enough to be an executive priority? And so positioning and messaging, when it's done well, it will take a mid-level problem and make it an executive level priority, and it will enable you to distinguish how you help people. The next one is ideal customer profile pipeline generation, not just pipeline, ICP pipeline. And if I've pretty much every company I go with into, we define a named account model. There might be 2,000 accounts that we're going after. And I want to know, how are we progressing against those 2,000 accounts every week? So that's super critical. You want to do programs that get your ICP. And oftentimes that means you have to do much more outbound than you do inbound. The S stands for sales effectiveness. And so there are many things that we just have to improve to address this bimodal performance distribution. So it's hiring, it's enablement, it's sales process and methodology, it's manager skill set, and there's a tool and technology aspect to it as well. The next T actually stands for kind of team effectiveness. We talked about the management team working well together holistically and go to market. The same thing has to be true at the street level with the reps. The reps have to work well with marketing, with SDRs, with sales engineers, et cetera. The O in Piston is objectives for customers. And this is basically value selling. One of the biggest sins that we have in the software industry is that we will do ROI business cases to acquire a customer, and then we will never revisit them. We don't measure when did you get value? Did you get value? We'll just engage them and say, hey, how's it going? And let's get the renewal. And there's more than that's done by customer success, but is there a disciplined, consistent approach to measuring value, not just to get the deal closed for acquisition, but really you should think about it all across the customer life cycle. You should be talking about value in the very beginning when someone's reading your content, when the SDR is engaging, when you're doing discovery. You should be building that value case mutually with your customer. But then once you win, you need to actually think about the key metric is what is time to first value, and then how do you scale it? And if you're doing that well, I guarantee you're going to renew, you're probably going to have pricing power, and you're going to expand, and you're going to get advocacy. Unfortunately, it is very seldom done. And then the final N is NRR maximization. And that really speaks to, let's put our energy in a very disciplined and structured way to think about how we expand our customers.
Gorgeous. And we'll link some content to these frameworks as well in the show notes. Okay, wrapping it all up, R.
And I'm just going to stay high level on this one. And it really stands for revenue system. And notice I don't say revenue operations, but how all these things fit together to actually, because you do need things that are going to align all these different teams, and you need things like process, you need things like forecasting.
Those are amazing frameworks. Anywhere people can find out more information about these, or how do they?
Yeah. So I'm in process of publishing this. I have written 4 pretty rich articles so far, and I've covered STE. I covered STEER and then STE. I still need to write effectiveness, revenue system, and then there'll be one about sort of growth strategy. And then I have a bunch of stuff coming about AI for go-to-market too.
Let's pivot to personal life, because paying attention to the whole person is often what unlocks difference in performance as much as these frameworks and science. As you think about the factors in your life that allow you to show up as your best self, what are those on an everyday basis?
On an everyday basis, I think the first thing is do something that you love. I actually love this work. I think it's super important. I'm always getting better at it. And so I think it does start with that. That's
capital WILL. No. Will.
Yes.
Yeah.
Number 2, I would say it is taking care of yourself and taking care of sort of home and family. So I think it starts with self first. This one, as I get older, I recognize the importance of health span and seek to be mindful of just certain practices that are just going to give me energy and give me just the ability to live a better life. A third thing for me is meditation. This is actually very much a tribute to my dad, who passed away at the beginning of the year. He had probably my whole lifetime has been trying to persuade me to meditate. I finally picked it up as a tribute to him.
Where do you draw inspiration from, AJ? Books, podcasts, events, groups?
All over the place, Linnea. So look, what motivates me is being around really high quality people, especially people with whom I have in common. I'm expected to know everything about everything in go-to-market. And the reality is nobody does. So I started doing these events to actually meet more marketing executives and learn from them.
This is the Go-to-Market Leader Society.
This is the Go-to-Market Leader Society. Yeah. I've got 5 councils. I've got 2 or 3 people who run each council. And we're all just passionate about our field and want to learn. And it's been immensely valuable for me.
We're nearing the end here. One final question, and then we're going to get into our lightning round.
Okay.
As you think about the next generation of go-to-market leaders, CROs, go-to-market operating partners, what do you hope they stop doing, and what do you hope they start doing?
I think the biggest stop is running your function as a silo. I think if I were to say the biggest problem that I see existing in companies, it's actually not strategy, it's not talent, it's not AI. The problem statement is fragmentation. And what I actually think there is a real need for is teaching the other complementary functions in go to market, because a finance leader doesn't really understand marketing. Certainly, nor does the sales leader. And that's what's actually complicated about this thing. So, if I want to have a CRO, people naturally think, oh, it's probably going to be the sales leader. But if they're a sales leader, do they really understand how to think about how much should I invest in marketing versus sales? And if in marketing, how much should I invest in brand versus product marketing versus demand gen, inbound versus outbound? How do I think about the marketing operations, technology, and the function? Should I integrate it as revenue operations? Does that person who's quote CRO really have an authoritative understanding of how to make those decisions? Barely ever. So I think the key is actually learning the other functions and finding a way to collaborate.
What do you hope they start doing?
I do hope they start collaborating. That's number one. I think the second thing would be just taking a really structured approach to thinking through go to market. I believe that you need to rethink your whole go to market model, at least on an annual basis. And this is actually at the company level. To me, I've said it before, I actually really think the CEO and CFO run go to market as much as the CRO, marketing leader, et cetera. And so I think you do need to, in these sort of changing times, you do need to take a step back and think about the fundamentals of the strategy, the ideal customer profile. How well are you meeting the customer's needs versus alternatives, the offer design, the pricing model? I think there's a lot that needs to be thought through at the strategy level. You need to constantly recalibrate the team, and you should go through that steer process on an annual basis and fine tune. But let me say this though, you cannot do like a zillion things. You've got to figure out what are the dial movers going to be and pick those few things that are really going to move the dial. And it's a mix of quick hits and big initiatives, but you really need to be disciplined about when you take something on, run it through fully with full commitment and recognize that there's going to be a learning process.
AJ, in each episode, we like to define brilliance in a few different ways. So if you could please fill in the blanks. Purpose is
making a contribution that matters.
Leadership is
foundational to being effective in any role. And it is most evidenced by followership. Success is outcomes or value for all stakeholders. So that's the customer, the employee, the rest of the executive team, and in the private equity context, the board and LPs.
Brilliant leaders
are strategic. They need to have a strong North Star about what they're trying to achieve. Collaborative. Every leadership role needs to work with other parties. And assertive. They have to be drivers of making things happen.
Brilliant go-to-market operating partners are.
Brilliant go-to-market operating executives are low ego. You have to recognize that you don't run the portfolio company, the management team does. They are collaborative. It is about working with them such that they want to work with you and will share with you and partner with you to make things better. And assertive, you have to push people's thinking and be receptive to them pushing your thinking. So that is a key requirement to being successful.
I perform at my best when
I'm working on something significant. I'm able to make a really strong contribution and there's an opportunity for growth.
AJ, this was everything that I hoped it would be. Thank you so much for the frameworks, the ideas, and more importantly, the stories and the generosity. And I know there's so much more to this. We'll have to have you back sometime to talk about AI, which is a topic in and of itself. Thank you so much for coming.
Linnea, it was a complete pleasure. Thank you for having me on, and I look forward to continuing our conversations.
Thank you to AJ Gandhi at the Go-to-Market Leader Society for joining us on today's episode. I hope you're walking away with a reminder that sales is a science, that go-to-market drifts before it breaks, and that when you put the basics back in place, the returns are massive. And thanks to you, our listeners, for tuning in. That's it for this episode of the Brilliant People Podcast. I'm Linnea Jagnelius. If you found this conversation valuable, make sure to subscribe, rate, and review the show so that you can get access to the next episodes with the next brilliant leaders and learn from the very best and brightest. Until next time, stay brilliant at work, and as AJ might say, do the basics better.